Zane Jacobs, CMG. Man, we are coming to you live in Folsom today. Excited to be here and excited to talk about building equity. Right, we're gonna focus on that building equity, and we're gonna also talk about gaining access to equity or more money, or to be able to do what you want to do in life. So, Zane has a few programs that kind of just rolled out that we want to talk about that may help you in your current situation. Whether you're just getting started out in life, you're younger, you're looking on that first home or maybe your second home. There's a way that you can access some equity that it's a little outside the box, but I think that there's more opportunity than there has been in a long time in that area. And then we're also going to talk to the people that maybe have some equity in their house, and there's a way that they can probably access that money for much faster than they think. So I like the opportunity here. So I'm excited to talk with Zane and you guys about this, to share this information. So if you're just joining us, just give us a thumbs up. Let us know that you're here. If you have any questions, feel free to ask them. We'd love to answer them for you. But first, before I hand it off to Zane, let's talk about the inventory right now. So depending on where you're looking in the Sacramento area, you're going to have about 1 to 1.5 months of inventory. What does that mean? That means that's how long it would take us to run out of houses if we didn't list any other ones. And so it's light right now, especially under $550,000. There are minimal houses available. However, in any market, what you're going to find is deals. You are going to find deals. You're going to find houses that need a little work. You're going to find houses that have deferred maintenance. Whether it's myself having, several clients that maybe might not even want to list it, kind of off market opportunities, or the people that think they have to, spend hundreds of thousands of dollars to fix up their house to sell it. There are always opportunities. So let's talk about that building equity portion, and you kind of have a loan program that can help with that.
Perfect. Hey guys, again, Zane Jacobs here, CMG Home Loans. Pleasure to be with Brandon and the team today. So like Brandon was talking about, with inventory being limited in and around the Sacramento market, folks are going out, they're looking at homes. Sometimes they're getting buyer fatigue. They're getting stressed out because they find a home that they want to go and get an offer submitted on. And then once they submit the offer, it turns out there's 15 other people submitting an offer and they get beat out. So if that's you or somebody and you're getting frustrated with that situation, we want to talk about home renovation loans. So there's 4 different types. The name of them don't really matter. What's important to you is we would structure the loan based on what your needs are. So if you're going out and you're in that buyer pool competing for business that's out there, you can take yourself out of that buyer pool and go get a home and turn it into a home that you want. So in and around Sacramento area, there's distressed properties. They either have like foundational issues, or there's like exposed beams, there's dry rot, there's stuff that a traditional loan just wouldn't work on. And most people wouldn't have the time or energy to want to deal with that anyways. But as they're going from a place of renting to moving into a place of being able to buy, there's usually a time run there. So it might be 4 to 6 months. So in that process, as you're getting ready, we can actually look for distressed property on the market, use a renovation loan to go ahead and get construction bids itemized as part of that, close the property, and then renovate it to your family standards. You could do paint, countertops, carpet, put new pools in, put new appliances in, basically make a property that wouldn't otherwise be there on the market for your family specific needs. So really cool stuff with that. People are not typically taking advantage of the renovation loan. And in this type of market, to get access to something which wouldn't otherwise be there, the renovation loan makes sense. And what I always tell people is it's not really dollar for dollar. It's not like if we put $10,000 in renovations in the property value goes up $10,000. The reality is you can leverage bank money, you get the property, you do the renovation work, and your loan, might only put $40,000 of renovation into it, and it ends up going up $100,000 in value. So instead of you buying a house at the appraised value from somebody who's trying to sell it to you for a premium, you could potentially go find your own house, renovate it, and walk into $50,000, $100,000 in equity just by using and leveraging bank dollars. So great opportunities there, Brandon.
Yeah, no, and to that point, we're talking about you can target up and coming neighborhoods, or you can target a distressed property in an amazing neighborhood. Like he's saying, come in, make it your own, and build that instant equity, where sometimes, like he's saying, you put in 50,000 and it goes up 100 or 150,000. Like we've seen that happen. And so it's one of those unique kind of opportunities. And of course, we don't know enough about your current situation or what you're looking for, but with the four different types of these type of loans, there are options for you.
Yeah. So the cool thing about that is too, there's typically gentrification happening in most big cities, especially Sacramento. And so there are certain growth tracker areas where government dollars are already going in there, and there's other investors going in those areas. And so houses on the periphery that wouldn't otherwise be attractive, you can go ahead and get a renovation loan, fix that house up to your needs, but also reap equity, meaning the property value going up just because there's other construction and stuff going on in the area. So you could get more money out of the house just by what's being put into it, on top of having other people clean up houses in that same neighborhood, and then the whole neighborhood's going up at an accelerated rate. So really cool stuff. I really love the renovation loan. Really gives you a chance to personalize your home, especially for your kids if you have them. If you have questions on specifics, go ahead and just reach out to us. We'd love to take care of it, answer any questions, get you in for a formal intake, and we can look at your situation specifically.
Great. And so just to kind of wrap that up on the building equity portion, there are a couple things, because the main questions I get when I talk about any kind of rehab or 2 or 3K loan or any kind of opportunity like that, everyone is always like, well, how much higher is the interest rate, right? So that's the first thing I probably want to talk about, is compared to a normal FHA or conventional loan, what's the difference in interest?
Yeah, the interest rates are roughly, between a quarter point and a half a point difference right now. So the market isn't that much different for those interest rates, especially if you're talking about like financing over a period of time, right? So if somebody was going to take a 0.5% different interest rate on a loan, but get $50,000 or $100,000 in equity, how long would it take them to pay down $50,000 or $100,000 with just a 0.5% loan cheaper in payment? Probably 10 years. So the reality is what you could potentially leverage it for versus the time difference is dramatic. So great opportunities there. And that's not to say you're stuck in it. You can go into the renovation loan. You're there for maybe a year or two, and then you refinance into a cheaper loan later on, and you have a shorter payment and equity in the property. And just a caveat on this real quick, something that you guys definitely want to hear today. We just had a market update on the capital markets call about 15 minutes ago. And what they're saying, all the experts across the country, that we are going to experience a rate drop decrease consistently from now until the end of the year. So rates are going to start coming down. The government is responding to the slowing down of the economy, and we're going to start to see it try to trickle down, and it will definitely filter back into 2024. So good stuff coming on the horizon when it comes to rate decreases. Look forward to that. Definitely take advantage of the programs that we have out there right now.
Perfect. And the second question I always get is, how long do these, like, you hear stories, right, from family or people that how long do these loans take compared to regular loans? Because a traditional loan is going to take about 25, 30 days. These loans can probably take about 45 to 60 days in most cases, because you have contractors involved. We don't want to bog you down with all the details. You have questions specifically about your situation or more questions about these programs, reach out to us. We'd be happy to answer them. But let's jump into accessing equity, which I love it when new loan programs come out, because and that's why I'm working with CMG. That's why I'm working with Zane. I love when there's creative loan programs and things that come out that really are consumer based, are trying to help the consumer, trying to give them options, to leverage their biggest asset in their home. So let's talk about accessing equity. Let's talk about home equity lines of credit.
Okay, perfect. So, as most people out there wouldn't really understand, a home equity line of credit, or formerly known as a HELOC, all it is a giant, basically, credit line against your property. So, if you already own a property, chances are you have a regular mortgage on there, and there's some equity built in it, because in the last 3 to 5 years, property values have doubled. So, people have equity, meaning dormant value sitting in there that they have access to by either selling or pulling money against the property in the form of a loan. Now, you can do that with a cash out refinance, but that's not really advantageous right now, because most people that have their houses in the last 3 years bought in at a place where interest rates were dramatically lower, and so they don't want to refinance out of it and lose that rate. So what the second option is, you get a second loan against it, a home equity line of credit, like a giant credit card attached to your house, that you can go ahead and draw funds against it and use that for renovation for your house, funding a program for maybe your children to go to school, buying a new car, whatever. So it's a giant credit card with a much cheaper interest rate than a credit card, because it's attached to your house, called a fixed asset. So much better than a standard credit line. And we have a new HELOC program that Brandon's referring to right now that actually can fund in 5 days. So the most amazing thing about it, it's all digital, it's all automated. You get online, fill out about a 10 to 15 minute application. It will give you rate breakdowns showing a 30-year fixed rate breakdown, a 15-year, a 20-year, and you can select a payment that's comfortable for you relative to a line amount that you're going to get. So if you wanted 100 grand, for example, you would put the 100 grand in equity in there. It would spit out the payment at the different term lengths, and you could select one of those and literally fund and have money in your bank within 3 days. So I'll tell you, 3 days to get access to your home's equity is unprecedented. Usually it's 30 to 40 days, and that's if everything is wired tight and you have a good credit disposition in your file and everything else. But in this case, literally, the appraisal is done online. When you sign with a notary, like when you buy a house, it's all automated. They'll sit through a virtual terminal and talk to you about the terms and conditions. You e-sign everything, and boom, they're wiring money into your account. So great options if you have equity and you've had a project you've been wanting to get into at home, or you've had a business opportunity. Maybe your business needs some cash flow, or maybe you've had some other type of opportunity that you'd like to do a short-term flip on and make some money. This is a great option for somebody that needs access to equity immediately.
And I love that, because I've been having a lot of conversations with people lately that say, hey, I want to invest in real estate. Well, it might not make sense for you to invest here locally, but there are opportunities out of state. There are opportunities for investments coming up all the time. And being able to pull some of that equity and use it for an investment property, I think that's a good option. So some of you that have a lot of equity in your house but might not have tons of cash flow, feel free to reach out to me, and I can connect you with the right people to give you some opportunities to buy some properties, potentially out of state. Might not be the right fit for everyone, but there are always opportunities out there.
So, yeah, Brandon, let me add to that real quick. So just to shore that up. So just think about it like this. Maybe you have $100,000 in equity you're going to pull out of your house, and the payment on there is just say $300 a month, $400 a month. You have it over a 30-year term. You can then take that same $100,000, buy a house in the Midwest that's going to make you $1,400 a month, and you'll net $900 to $1,000 in profit. So basically just leveraging equity from one area, putting it somewhere else, and then making high rates of return. So that is one aspect of it that people love when it comes to investing. Another aspect would be like short-term financing. So say, for example, you have a yard and you've been wanting to put a pool in it. And when you talk to the pool company, they're telling you the financing for $80,000 is going to be in 12 years and the payment's going to be $800 a month. Well, if you set this one at maybe a 30-year term and it's a fixed to your house, now maybe the payment is $500 cheaper a month. So you get the same pool, it builds wealth and equity in your house, and now you have a cheaper payment, so your living expenses are more manageable. So great opportunities for personal projects, investing. We do all of it. Just reach out to us, and we'd love to help you out.
Love it. Yeah, that's it for today. If you have any questions, again, reach out to us, send us a direct message, call us, text us. We are here to help, and we will see you next week at 1 p.m. Thanks for checking in, guys.
Have a wonderful day. Appreciate you.